Hello, buenos dias, friends. This is the video for September 22nd, 2020. What we're doing here and what this video stands for is it serves informational, educational purposes only and is general in nature. Okay, let's start with a little agenda for today. So topics for today are very similar to the ones which we usually have, which is portfolio management. We'll look at the performance, winners and losers, and we will also have a look that, there are some trades which expired, so we'll have 3.3k around of dollars on this account free for new trading. There are still some positions which are blocking rest of cash. We will go through our routine, so we'll look at how the markets are performing and how's the volatility index. Is there fear on the market or are we relaxed? I will use a little tool, introduce a little tool to you, which is called Fibonacci Retracements, and we will use this to identify potential support and resistance zones for the market, SPY. So, as to our positions, we are left with only 4 of those, and we're not looking like amazing, but we're recovering, right? So, I still hold the position on Apple, Microsoft, and Philip Morris, which are butterflies. I didn't decide to close them or manage them in any way yet, because I expect recovery in the tech sector, and these butterflies have a lot of days in them, 2 months. I may consider converting this to more bearish trades as this time starts running out. I may actually roll these calls here at 140 for Apple and convert this trade to bearish trade, but right now I just decided not to do that and give Apple some time to recover. Today it already recovered a little bit, same as Microsoft started moving up, so I don't want to start wiggling with this position when it's in recovery mode, especially when you look at the charts. And let's have a look at Apple. Looks like it's again above its 50-day moving average. It kind of may bounce out of it, and if it does, I expect it to go quite quickly higher levels, converting this position to a more bearish position. So if you go to Analyze tab and we look at the Apple, boom. Well, our position looks like this. This is a butterfly, broken wing butterfly, and we're quite far down here. We're losing on it quite a bit. It had massive drop, and it's very close to our max loss, 170. So the total risk that we took in this trade, and so it's only a difference of like $60. So I thought like, okay, it jumped there so quickly. I didn't manage this properly early on, so now it's kind of late to change this and would not make any sense for me, especially that I have 60 days in it. But what I could do is I could convert this trade to a bearish trade if this Apple decides to stay in this area, somewhere around 120 and 30. What could I do? I sold 2 calls with this butterfly. That's what makes the head of the butterfly. I sold those 2 140 calls, and now they are very much generating profit for me, because we are far out of the money from these calls. So what I could do, I could just bring the level of 140, so buy them back and sell them again at the level of 130 or even 120 or 125, and this would convert that trade to a bearish trade. And to show you that, I can actually do that in trade. 140s are worth 173, so you see they generate a lot of profit right now. So I could buy them back and roll them to a level of 130, let's say, where I could still generate some profit out of this. If I sold 2, it would be like 36, 60, so 300 to our trade, and I'm just bucks more or less back. I'm just gonna simulate this. I'm gonna say analyze rolling trade, and I will sell these. And I'm going to keep the same expiry date, which was November 20th. However, I'm going to roll the strike price down to the level of 130s, and just observe how the risk chart changes. So I'm just going to 130. And now you see that this trade will be converted to a bearish trade. So Apple is right now here, right? So if it decided to stay at this level,